We're going live. It is.
We did it.
We are a little bit late. Sorry, folks. It's 10:38 a.m. On the West Coast, it's 1:38 p.m. on the East Coast. We had technical difficulties, entirely my fault. What's happening, fellas?
Just happy
We're
you got it
live.
working,
Yeah. So we got that going for us.
which is nice.
It's Value After Hours, and I'm Tobias Carlisle. I'm joined by Jake Taylor and Bill Brewster, as always. Are we in a bear market, fellas? Has it happened?
I don't know. Jamie Dimon says expect volatility.
No.
So there you go.
Expect volatility.
Hey, Barcelona's in the house.
What's
Nova
the market
Scotia.
going to do, Mr. Morgan? It will fluctuate.
Yeah.
Well, he says that, QT and the lack of
QT, is that a new rapper I don't know about?
yeah. Well,
Okay.
it's one that we're all going to find out about. So
Okay.
it's going to be interesting to see. I think would have been nice if you released this from a timing standpoint 6 months ago. Would have been a little more helpful, Jamie.
Yeah, thanks,
Yeah,
Jamie.
I saw Morningstar's flip negative on ARC. So
Oh.
that's helpful.
Cool.
Ugh.
Not at 156. They flip negative at 66. Thanks, fellas. Oh, we've lost Bill.
Well, the fun continues. Yeah, that's not very helpful, is it?
I mean, it's a tough job, right? I don't know. Like, I don't know why you were what the argument for being, for being long it would have been at 156, other than momentum.
Other than it's just been working like a charm for a while.
Yeah.
No, it's like JP Morgan flipped on China ADRs at the what they said they're
Dead
uninvestable at the exact bottom.
You know what's so
Yeah.
funny about that is I was listening back, as I like to do through the Berkshire annual meeting. In 2004, someone asks Buffett about Chino Petro that they purchased. And of course, his very rational answer was, at a certain price, you are being compensated for any extra risk that is there. And we felt like it was worth it. It's kind of like, okay, well, that was the answer all along if we wanted to just like dig for it.
Yeah.
Well, but that's not a secret. I think the more interesting question is, will Berkshire come out with any Chinese ADRs in the next 13F? And if not, why?
I would be very surprised.
As would I.
What was the China Petro? How was that? The ticker, it had a really odd ticker, right? It was like CNOOC was the ticker. I recall.
That makes it uninvestable.
Well, I don't know what that was. I don't
Can't
know
buy
if it was-
5 letters.
Yeah, that's weird, isn't it? 5
Can't
letters.
buy 5 letters.
No, all the good ones are 4
Or 1 letter. That's the real.
or 2.
Okay.
Yeah,
There's a
4
lot.
4 is Nasdaq, I think.
So
There's a lot of stuff going on, fellas. We might have to jump into it a little bit here.
Okay,
Yeah.
yeah.
So, what's the most pressing thing? Elon buying Twitter. Is that the biggest flex we've seen so far?
Yeah. It's the biggest news of the week, I think.
adding
did he-
him as is a second class citizen board member. I don't even know what that means.
Well,
What is
my
he?
man
Is there something
Compound,
funny about the position? Funny about the directorship?
I think
he's
he's
got some
taking
rules on
Jack's
it.
seat.
Oh, really? Fair
Still
enough.
warm?
Nice to be done by somebody who cares about Twitter.
Well, someone
I'm
who
not
uses it.
certain Jack does. Yeah.
I saw a funny tweet where someone said, I wish that the directors actually used Twitter. And then the next thing was like Monkey's palm closes. Monkey's finger goes down.
Well,
I mean, he's the best Twitter user I've seen. He's
Yeah.
probably got the biggest account. It makes sense that he's actually in there. He uses it.
Yeah.
Well, there's a number of things. One, it seems to me that guys that get in power want control of a media outlet, and he just bought his way onto the board of the most powerful media outlet in the world. So that makes sense. Two, he probably got insurance from getting kicked off. And like three, I kind of wish that the people that worked at Twitter used Twitter. Forget the board. Those are some of my thoughts.
Is he going to get an edit button added? That's what everyone wants to know.
I hope not.
Yeah, I don't want an edit button either.
How about
it's just too open to abuse, unless there's some way of tracking the edits.
Well, and like I don't know, the guy. I think it was he goes by Boz. What the hell is his name? Bosworth. He was like, at Facebook we did this, and you can see if a tweet has been edited or whatever. It's like, once something goes viral, if somebody edits it, then you're gonna have to like click on it to see which version went viral. Like, no, just leave it be.
Too lazy for that.
If people don't like it, just shut it. Delete your tweet. I don't know. I've gone back and forth on the edit button, and I'm squarely against it now.
Do you think it's a weird filing that it was a passive filing, and then he's been added to the board, and he's had to sign a standstill and all these other things?
I don't know.
And it was a little bit late too.
Yeah.
I mean, that's the most active passive filing I've ever seen.
Yeah. No kidding.
It is Elon. He said that he'd been they said that they'd been talking to him before the filing.
Yeah. I mean, I assume a guy like that can get somebody on the phone when he wants.
Did you sell Elon his shares?
No, I've been out for a bit.
Okay.
But
that would have been kind of fun.
No, that would not have been. I really would have been mad at myself. We'll see. I don't know. We'll see. I don't see how Elon on the board really does much to change Twitter, but maybe I'm wrong. The stock price seems to be reacting positively. I do kind of want to buy some YOLO calls in case it turns into meme stock.
Just on your comment before about guys getting powerful and then buying like a mouthpiece, in some ways this is sort of the reverse of what he's doing, right? He's trying to get, well, we all think that, like, he ran the poll that said, do you think that the Twitter has too many restrictions on free speech? And it was like overwhelmingly 70% yes, 30% no. So if anything, what he's going in to do, or the mandate that everybody seems to think that he has, is to go in and take off all of those fetters, right?
Well, it depends if you believe what you're seeing.
Care to unpack that conspiracy theory, sir?
No, I don't. Look, I don't doubt that that's what his tweet said, and that's what the poll said. I don't know enough about him to know what he's thinking behind that tweet.
I think more people were imagining that he was going to be starting his own competing network. Wasn't that sort of the...
Yeah, me and Akram's Razor, we were on a space on Tuesday wondering if he was going to like buy Clubhouse and try to start something over that. Turns out I think he made the right decision and just bought, into Twitter. But I don't know. I just I just don't trust what I see. I don't know what else to tell you.
Twitter seems to be like, you're almost buying it at a discount to what it'd cost you to put it together, aren't you? Like, it's not so much the coding it up, but getting everybody to use it. There are heaps of competing, like, social, like Twitter kind of clones out there. And that just, I don't know if we're just going to have this complete balkanization where everybody who's one political persuasion goes to one and everybody who's the other political persuasion goes to the other.
That should help us meet in the middle.
Yeah, that'll be great.
I think it's all just going to stay on Twitter.
Yeah, that's what's going to happen.
Yeah.
Because there's just nobody on those other ones. I mean,
yeah.
I don't know.
No, Didn't True Social just shut down? I think it did.
Which one was that?
I thought that was the DWAC. Well, maybe it wasn't the DWAC one, but hang on.
Not good.
Yeah,
not gonna go there anymore.
Yeah, I don't know. I mean, I guess Trump's True Social still facing financial and technical woes. Looks like a bust so far.
This Getter too, GETTR, Getter.
Yeah, it's hard to start up a network, man. It's not so easy. It's part of the problem with super follows, especially if you're me and you have nothing really intelligent to say. It's hard to drive a conversation to a secondary network.
What is a super follow? What's that do?
Well, if I had like product knowledge or something, I would maybe be dumping some knowledge behind a paywall, and then you have like a secondary Twitter feed. And
Bill gets
there are apparently
paid to
some
be
people
Bill.
that are smarter than me that can maximize it.
You give us all the gems here for free.
I also don't have any gems, so that helps.
Yeah, it seems like Twitter. I don't know how you fix Twitter, but it seems like it does. There's something wrong with it, right? But it's so much smaller than it's comically small relative to the other social networks. It's hard to use when you first get on it, but it's like once you use it, it's highly addictive, and it functions as it's the news feed. It's the way to communicate with people. You can find your little tribe.
10x useful.
Yeah.
LinkedIn for that type of networking. I mean,
or Facebook or anything like that. Yeah, 100%.
Yeah.
It's strange that they just can't figure it out. I mean, I don't know. It doesn't seem that hard, but other people have figured it out.
I mean, I think they're in the process of figuring some of it out, but they got.
Well, there's an evergreen statement.
Well, I think they're subscale. Like, I think their SG&A. I mean, look, their revenues have gone from 3 billion in 2018 to 5 billion in 2021. That's a real company. Whether or not it's a public stock you want to own is sort of a different conversation, right? But like, I think if I created a business that had 5 billion in revenue, I'd probably be like, fuck you. What have you done? You go create something with 5 billion and tell me that I didn't figure something out.
How much what's the revenue on Facebook right now per year?
Oh God. I don't want to misquote it because I'll sound like an idiot. So hang on one second, but it's big, as are the margins. 117 billion.
Yeah. So like
118.
So like they basically have Twitter's revenue in like, I don't know, what is that? 3 weeks or something?
Yeah, no, Facebook's a different beast.
It's funny how much better
they don't even monetize WhatsApp.
Jack's tweeting got so much better when he left Twitter. Like, what's that about? Are they fettered? There's some restraints when you're on the board. Maybe, I don't know why you wouldn't
guarantee you Elon isn't going to use restraint.
He's already got a Twitter sitter, hasn't he?
He's already supposed to have that. That's not a thing.
Yeah. So I don't know why Jack didn't use Twitter when he was on Twitter's board. That was frustrating as someone who cares about how Twitter does.
Good comment here from Gaurav Sharma. Weibo, Twitter of China, is also in the same boat, indicating it's a universal problem. Yeah, what is the problem? It's too. I mean, the reason why Instagram and TikTok have exploded, right, is because they're much more visual. They're just all visual. Whereas Twitter, you got to read. So right away, people are just like, too hard.
Instagram sells to your penis. That helps.
Let's say limbic system.
Whatever.
Limbic system.
Yeah.
This is a family program after all.
Yeah. Well, yeah.
Oh wait, no, it's after hours. It's fine.
I mean, Twitter could be doing the same thing though, couldn't it?
I don't think so. You're just like selling to people's heads.
Yeah, this
like
is just
the head
nerds talking about.
But you could make it visual. You could make you could make your own account visual. Like you just attach a picture to every single one.
Well, it does seem like if you add content like that those tweets tend to do better than just the word ones. Like I think they push those more behind the scenes.
Yeah, I mean, the other thing is like Facebook was set up from the jump to collect information, and Twitter really wasn't.
It's weird, right? Because you're talking the whole time. You're telling everybody what you feel, what you're thinking about, what you're interested in all the time. It should be pretty easy.
Yeah, you would think.
On the back end, that should be. I mean, it's easier than like trying to figure out what a picture means.
Turns out they need credit card data and then third parties to tell them what you want, rather than just the interest graph that you've created for them.
The like billions of things that have been liked that should give you exactly pinpoint what you're into.
Yeah, it's not very hard to figure out what I like if you follow me.
Yeah, you would think that would be
classic cars, stocks that go down, and
that's right. Golf,
golf,
and hip hop.
Yeah, that's That checks all the boxes.
Yeah, it's not. I mean, just start advertising to me. It's not very difficult. And weed.
Oh yeah.
Which they can't advertise yet, but maybe someday.
Let's talk about some investing stuff, just so we have some investing people here. So I got a few things. I had a look at the S&P 500 sectors.
How's it doing?
It's ugly for the year. The only thing that you want to be in is energy is like rocketed. Everybody
not great, Bob.
But utilities are like marginally positive on the year. Everything else looks nasty, looks ugly. But you probably didn't need to be told that. But it does make me like we talk about this a little bit. This like whether we're in a rolling bear market or not. Like I kind of think that we probably are. Although it's crazy how have a 2% update, like, and right on the back of it have a 2% down day, which I guess that's like pretty classic bear market behavior. But like I really do think we're into this long rolling bear now, and we're going to see these like lower lows, lower highs, and so on. I don't know when it goes, but what do you guys think?
It's really depressing, Toby. I'd rather not think about that.
Low T, as someone comments, it's
low T.
a few months ago, we were bared up.
There's a lot of stuff that's gotten just trash though, and that's what's tough. On the other hand, I don't know that there's a lot of like screaming bargains around. I think there's a lot of stuff that could work.
Yeah, I mean, do you get the sense like, are people waiting around for better prices, or is it?
Oh, I don't think so.
No,
I thought everybody thought like when we had the rally over the last like mid March to a week or so ago. I got the feeling that all the SaaS tech stuff, like everybody thought that was back for a little bit, and it's kind of just bumped sideways. Like ARK bottomed out and then rallied a bit. Tesla's like rallied a bit. Tesla's over 1,000.
Oh, that's a good rally. Where did it bottom? Like 700 or something?
I don't know. I'm not entirely sure, but it's like it was 11. It's close to 1,100 today, and it was down like 4 or 5% for the day.
Yeah, I mean that was down around 766. I don't know. So what? Roughly a $800 billion company. Whew, those are big numbers. I don't know.
The market cap, yes. Not any of the other numbers.
Yeah, I mean, I don't know. Things I think they've gotten more rational, but I also think
how about
I was only crying 2
inverting.
weeks ago, so I can't get too ramped up.
So the inversion's uninverted again as of today. It was it got inverted over the weekend.
Recession canceled. Is that how that works?
Recession's over. Well, the 2019 inversion was very, very brief too, and then it's like 6 months later the recession is officially acknowledged, whatever that means.
Okay, so
are you saying that we're going to get another COVID?
Mate, this thing is amazing what the inversion can predict. The inversion predicted COVID. Yeah.
Sorry to Spotify for demonetizing us and Google.
This is not. I think that's okay now. I think that we're past all that.
Okay.
Even on Spotify?
Yeah. It's just distribute. It's probably we probably get most listens on Spotify or something like that. I don't know. It might be Apple. I don't know.
Okay. Terrific. Hello.
I just print out the transcript and put it on a bulletin board down at the local library.
Exactly.
That's the extent of our distribution.
It's written on the bathroom wall at the YMCA.
I like it. Yeah, I mean, I don't know. I think.
Well, Toby, how does that work then? Is it have to stay inverted for a while before that counts as a tripwire, or is just like at any point does that get the clock started on that 6 months?
I don't know, because the Cam Harvey version is the 10-year 3 month, and it's been very predictive. But somehow through all of that, it's converted to the 10-year 2 year.
10, yeah.
I don't know why that is it doesn't really matter, I guess. They're just looking at the midpoint of the curve and the front end of the curve, and if that's inverted, I'm doing the Top Gun inverted.
Yeah, Top Gun.
If that's inverted, then that predicts, and I guess there's a reason for it. People want to get paid to hold short-term risk. And for some reason, if they want to get paid more than 10-year risk, I guess no one thinks that the recession is going to last 10 years.
I mean, the 5 year is most interesting to me because that's when you have a lot of corporate roles.
Yeah, that's something that's kind of interesting right now that was probably different than 2007. That I guess probably if we asked Michael Burry, like, what's going to be the catalyst of this, he would have told you in 2007, we know all of these mortgages are resetting then structurally, and that like the jig is up then, right? And so he knew he had a timeline, but like, what's the timeline for today? Like, I don't even know if is it corporate rollovers, like you said, Bill?
I mean, I don't know, but yeah, I think if you think there's a lot of debt in the corporate sector, anything between 2 and 5 years is probably when a lot of it's rolling. You don't get a lot of corporate paper that doesn't get rolled within 5 years.
They roll it. They roll it at any time that they can, don't they? Any time they get a good number, they'll roll it.
Yeah, but like the bank market, most of the terms that we wrote were 5 years.
Okay, they term it out.
So you're having a conversation every 5 years, and it's not fully amortizing over that 5 years, right? So you're always refining somewhere within those 5 years. Usually, year 4, right? Because you have fees every time you do it. So bankers start pitching on day 1, and companies start refining on year 4.
On year 4.
Yeah, I don't know what the catalyst is going to be, but it'll only be obvious in hindsight. We'll look back and say, oh yeah, of course, predicting them is harder.
I mean, I think this earnings season is not going to have a lot of exciting commentary out of it. If I were to predict it, I think like people are gonna, Restoration Hardware. I mean, I've talked about it a lot. I don't think we talked about it here, but that was a very, very interesting call. And, I don't know how to feel about that guy, but one of the feelings that I don't have is I don't think that he was putting on an act in that call. And can you just tell everybody? Yeah, I get to it. Let me wind up, Toby. That's how I do.
There's going to be some people just like the commentaries before you get to give us the news, then the commentary.
Yeah.
No, I like to wind up. Anyway, he said he's, confident but nervous. And it had a lot of what he's saying is like anything that hits the industry is going to hit us as well, but we will outperform the industry. Now, I don't know. He said a lot of stuff that I think everybody should listen to it. I think they should listen to it in 1x. It's either entertaining or informative or both. But he was really candid about a lot of the problems that he's seeing. And he's just like, look, supply chains aren't getting any better. Inflation is going to go up. Like he said, he was going off on Janet Yellen. But he was like, I don't know.
Why Yellen particularly?
I don't know. I just think he was like,
what's she Treasury Secretary rather than she's not Fed?
I just think he was like, she doesn't think that inflation's higher than 2%. Call any business person, they'll tell you it is. So he had one
that ivory tower once in a while and see what's going on in the real world.
Yeah, he said, either businesses are going to make a lot less or they're going to charge a lot more, and it's going on everywhere. And I think he's pretty true.
She's in the administration, right. So you're never going to admit to inflation if you're in the administration. You're never going to admit to inflation if you're in the Fed. We talked about that last week, just like stock markets at all-time highs, property markets white hot, consumer price index is at like 7.9% year on year, still can't find it. Looking really hard. Got our best men on it. 2%. We're hoping to hit 2%.
Yeah.
Well, so here's something that I think we've talked about a lot, and I'm just interested. I don't really have a strong opinion either way, but there's a lot of these, a lot of growth companies have gotten these huge valuations relative to current size. It's going to be interesting as always. And I've said this and been way wrong for a long time, but what lessons have people learned and are they the right ones? I think is going to be interesting because there's a lot of signal and, you look at direct to consumer, what's going on in streaming, and a lot of the reason that all these platforms are releasing their own streaming service now is they saw the multiple that Netflix got and they said, okay, well now I can do this. where else is that going on? Do these multiples stick? Does it actually make sense? Are certain investors that we are looking at really smart, or did they buy the right factor at the right time? I mean, a lot of that stuff we'll figure out. I don't need to figure out myself. I am not smart.
Got it nailed down already.
That's right.
Gaurav Sharma. Just talking. Yeah. So I thought that he was a little bit. He sounded not panicked, but concerned. I don't know if I'm glad that he qualified it with confident. But this is from Gaurav. He said container costs are up 3 times. Actual inflation's double digit. Profit margins all time highs. Stimulus going away. Fed raising rates.
I don't think he said containers are up 3 times. I think what he said is the last time that we re-upped our containers, it doubled. And I'm not going to tell you what it did this time, but it made that look good.
Okay.
It was a good listen.
Yeah.
And that's,
I thought
that's
it was
like
pretty earnest myself.
Yeah, right.
He's got a pretty good keyhole into the economy, right?
Yeah. I have questions on the entire value proposition of the offering in general. But
he's probably got a funny comp though, doesn't he? Because they would have gone with everybody bunkering down for COVID. Probably everybody was like fitting out their house with all the money they would have spent on a vacation. And so they probably spent a little bit of that restoration hardware. And so they had a good year, and now they're going to have a less good year. Yeah.
I mean, that's slightly offset by the G650 that you can lease to go to their new luxury hotel called Guest House. And then if you want to go to Paris and have caviar and champagne on the roof and look at the Eiffel Tower, you can do that. And if you want the RH3 yacht, you can do that. I don't know. This is part of what I don't like about them.
Is they trying to make it a luxury experience?
Yes. Yeah. He's trying to make it like a luxury lifestyle brand. And, anytime you say, well, now we're tapping into the 200 billion TAM of the travel market. It's like, oh, give me a fucking break. You're a furniture company, and your furniture is not that good anyway. But it is expensive.
That's the most important part.
Yeah.
Yeah.
It is a
good
nice
margins.
Long inequality play.
It is weird. I saw some figures again today that like the homes built by decade over the last, this thing goes back to like 1930, but that's less relevant. Last 3 decades, excluding the 2010s, we've built like 20 million plus houses. You think that's
fake news? I saw it too. I think it's fake news.
Well, what they were claiming was that the last 3 decades they had built, excluding the most recent decade, 20 plus million houses. And then the last decade they built like 5.8 or something like that.
Yeah, I don't think.
Why do you think that is?
Well, I don't think
those numbers are wrong.
Data is correct.
The numbers are wrong.
Would be the start.
Let's get Mike Mitchell on auto call right here. Get this cleared up. Batch signal.
It is weird. It is weird that I don't know. Possibly we were overbuilt. There was a big housing boom in 2005, 6, 7, I guess. Maybe that overbuilt, and so I don't know. Maybe there were lots of stuff sitting empty. But now it seems to be mostly owned by investors, right?
Now the investors is kind of not a huge...
Also fake news.
Yeah, I think there's a lot of narratives that are going on that are not reality. So like home starts from 1968 to 92 look like they averaged like 1.5 million. And they had big peaks where you would have like a year of 2.5 million. And then troughs of 1 million. But objectively, from the peak to the trough after the housing crash, I mean, we did underbuild.
Just not to that extent.
I think it's overstated. Yeah, I think that data overstated the problem.
Yeah, fair enough. The investor number that I saw was that it had gone from something like investors were about 20% of the market to they were like 31 or 2 or 3% of the market. And at the margin, like that's a pretty big change. That's a material like increase in the amount the investors are holding. I don't know if that's a true fact or not.
Well, I think that some of what happened was a lot of private equity came in and built out like multifamily. So if you look at units, that may be some of it. I think mom and pop saved up in housing. I don't think it's all like Blackstone, I guess is what I'm saying. But then again, private equity sort of is Blackstone.
Mate, Gaurav Sharma is crushing it. Research assistant. He's got container prices averaged 1350 in early 2019, now sit at 9,400. And then he's come in with another fact here: 30% of new demand is from investors, but investors only own 3% of total housing stock.
Bang! There you go. Thank you to you.
You're hired.
Yeah, that's right. We will pay you what we get paid, which is absolutely nothing.
It means we'll be sending you a bill.
Exposure. You get exposure.
Yeah.
Yeah, I thought that was. Anyway, I don't know what any of that means. I own some housing stocks, but they're not doing very well.
Well, we need completions. There's just no inventory. There's no inventory anywhere. So it's I listen to Logan a lot because I think he's been the most correct. Logan I'm gonna mess it up, but check it out. He was on my podcast. Mahat. Anyway, I feel horrible.
Come on, Whitey, sound it out.
I got another this sponsorship, and I think it's Bastiat, and I said like Bastiat, like a freaking hick, like hey Bastiat and my man Logan. Anyway, I used to go to. I had a Spanish at Auburn. It was hilarious listening to Alabama kids speak Spanish. They'd be like "soy de Dothan." It's like, yeah, that's not the accent. Anyway, I digress. His point on rates is like nothing is slowing housing. So rates going up is maybe the only thing that's going to make inventories come into equilibrium because there's just no freaking inventory anywhere. Just wild.
Yeah. I saw a stat yesterday that said that the whatever it's called, like you enter into a contract and it's kind of it's pending, whatever that
Escrow?
Before you complete. Escrow, yeah, it's got a name in the statistics anyway, and they had like they're 70% higher than the number of houses that are available for sale, which is like that's inverted. It's ordinarily the other way around. There's more houses for sale than there are sitting in escrow, I guess, or pending whatever searches or whatever's going on there, and that has to uninvert before there's any sort of relief in housing. But I saw another thing. The Zillow guy came out. The Zillow's got a state of the market kind of research report that said that the increase in rates is biting a little bit. Which makes some sense. Like you might see some cooling, and they've seen fewer searches, fewer applications for mortgages as this year relative to last year, like a pretty material change in it. And it might be that the fact that interest rates, like on any given day, seem to be going up like 0.5% a day.
Yeah, I think Housing Wire every Monday, Logan's on their podcast. And I think one of the things he said recently is builders I think it was, when was the last builder cycle? Like 17, I think it was. Maybe it was 15. I don't know. But when mortgages hit 5%, that becomes an issue for the building completions.
What are we at now? Like we're pushing
Close.
Up against 5%, 4.68. But like the move has been like, it's 0.5 point a day sometimes. So like that could be wrong next week. Could be over 5% next week.
Yeah, there's still though, like if you talk to buyer's agents, there's still a lot of demand out there to buy the house. So I don't think I think this is probably good. I don't think you want like a real runaway housing market. And I think it's already run.
What happens if rates go up, but so in order to move, you got to refi at a higher rate, right? Like no one's going to do that.
You just got to like the house you own.
Yeah, that's kind of can be crippling for mobility.
I mean, we've already seen like there are many fewer houses available for sale now than there were even 10 years ago. It's like 10% or something. That's the lowest on record.
Yeah, you better love where you're living.
Are you saying currently?
Yeah.
Yeah, but I think if you look at the number that turn each year, the number that turn are higher. So it's really that the days on market are super short.
Is that right? Because I
believe so.
That's interesting if that's the case. But I thought it was the other way around.
I don't know that it's going to be the case going forward with rates higher, but last year I think that's what was going on, was they were just hitting and gone.
It seems like when I look at that, the number of the days on market or the number of things that get turned, it seems there's more activity at the top of the market, and at the bottom of the market, like nothing happens. It's like the stock market, all the liquidity goes away at the bottom. There's all liquidities there at the top.
I think volume is the other way around in the stock market. Like all the volumes at the bottom.
Negative Ghost Rider.
So
There's no.
We'll look it up later and
I mean,
tweet about it.
yes. So 2017, 5.5 million homes were sold. 2018, 534. 2019, 534. 2020, 564. So I think
what are those numbers? Sorry,
those are sales. 2021, according to Statista, is 6.1 million. So I think it's just that things are turning quick.
I see. Okay.
Yeah.
Cool.
There's just no inventory.
Yeah. They put all
is
their
that
money
like a
into
supply issue? Yeah.
Yeah. Yeah.
If it's a supply issue, that's good for housing stocks. Nobody thinks it's good, which is potentially where some money can be made, right? Used to be that divergent opinions paid you.
They may again. I mean, definitely having a divergent opinion on energy has got you paid over the last 12 months.
Fair enough. You guys want to transition to some baseball
a divergent
talk?
opinion shorting tech also got you paid.
Yep. Eventually,
but it was a rough ride on the way up.
Yeah.
If you weren't wiped out.
You're going to want to time that one well.
That's right.
Let's do the veggies.
All right. This one's hopefully a little bit more fun than the normal veggies. Almost can hardly call it veggies, but as you guys know, I have a couple boys that are very into baseball. And so they're on travel comp teams. And so I spend most evenings and all the weekends pretty much at the baseball field. And, lets me think about all of the, what are the crazy analogies that I can pull from while I'm sitting around here coaching first base? And so I recently read, instead of just talking about reading it, The Science of Hitting by Ted Williams. And a lot of people are familiar with that because Buffett's talked about it, and he's talked about the, waiting for the fat pitch. And by the way, shout out to Alex for picking such a great name, The Science of Hitting. I think that was a home run choice there. So as I think everyone kind of knows that, the chart looks like a box in front of a batter that shows 77 ball-sized cells that fit within the strike zone. And Ted Williams figured out what his batting average was for where a ball was pitched, and if he hit it, he swung at it there, right? And so he realized that for him the pitches that were middle in on the plate for him were what he called his happy zone. That was where he made the best contact and he had the highest batting average. And so he had, cells that were like at 400, but the pitches that were down and away for him, he batted like 230. And so therefore, to have a good batting average, he had to choose carefully which pitches he decided to swing at. And so Buffett took that and made an analogy of investing, and that there's no called third strike, and that, he's looking for pitches that are, fat pitches in his happy zone. And he really correlated it to the circle of competence, right? Like the pitch that's right in your spot is your circle of competence. So, but it turns out that there's actually a lot more in the book than just that graphic that is sort of famous from it. And what's interesting is that Williams was just a total fanatic about batting. He thought about every single little detail that you could even imagine. And I love to read those kind of books about people who are just maniacs about a particular subject, and just to see how deep that they will go into something. So for instance, he knew that the batter's box at Fenway was just a little bit off tilted, so that the back of it was a little bit lower, and he felt like he always hit well there because he could drive off of that little bit of an incline. And conversely, that he knew that at Kansas City it was a little bit the other way, so he felt like he was always batting uphill. And he told the groundskeeper about that, hey, I don't think your batter's box is flat. And the groundskeeper then well, okay, it's supposed to be flat. He fixes it. And then Williams hits 2 home runs that day. And the groundskeeper almost gets fired for making that adjustment. So, and he didn't want to ever use a bat that had any chips in it or that was discolored, because he felt like even that would potentially distract him from concentrating on swinging and hitting. He took his bats down to the post office to weigh them exactly, because bats would be, they show up and they'd be whether it was a little different type of wood or where the cut came from in the tree, it would be different weights, and he wanted it to be exact. Another thing that was interesting was that he talks about how if he added basically like 2 inches around the outside of the strike zone. So let's say that you're kind of swinging at a pitch that's just a little bit outside of the strike zone, kind of a pitcher's pitch. You increase the target area total then of what you're sort of responsible for as the strike zone from 4.2 square feet to 5.8 square feet, which is 37% increase then of like kind of plate that you have to cover. That's a big difference, right? Like to think that you're going to be able to get out or to make a good swing on 37% more coverage is quite a bit to overcome. All right. So another thing is that he was kind of famous for using a very light bat, and he used a 35-inch bat with a 33-ounce weight, which would then be a drop 2. That's like in baseball parlance. And he used a light bat because he believed that like quickness of the bat was super important because it allowed you to see the pitch for longer and then decide, is it going to end up in the place that you want to take a swing at? So a big heavy bat, like Babe Ruth swung this, but just like absolute, I think it was a 54-ounce bat at sometimes, which is like ridiculous, but you have to really get going to swing that bat. And so like you're committed, you can't see the pitch as long to then decide, is this the pitch that you want to swing at? So I think there's a little bit of an analogy there with Buffett and, kind of being able to like, he will wait until the last, like, he's not going to go chasing. He doesn't participate in auctions. He's going to wait. And then he's going to have a really quick bat when it does show up in his zone, right? He can make a decision in 5 minutes, whether he wants to buy, do an acquisition. A lot of hitting is about anticipating what the pitcher is going to do. And I think there's an analogy for us there where, Williams wanted to make sure that he got a fastball to hit, and he would take until he got the fastball that he wanted. And we similarly have to anticipate what the Mr. Market might throw at us, right? So we kind of have to always have an inventory of potential ideas that we would want to swing at so that then when they do show up, we're ready to take our good swing, and catch that ball right where we want it. But if you're waiting until Mr. Market throws something and then you're like, oh, okay, maybe I should look into this one and research it. Well, you're kind of already behind, and you're not going to be starting your swing soon enough. It's going to be, the ball's going to get on you a little faster than it probably should. And you just can't expect as good a result. So another thing that is that Williams talked about was like maximizing the amount of time that the bat is going through the zone and swinging on plane from where the ball is coming in so that you have the best chance of getting good, clean contact. And, I think the analogy for us there is that, it's going to be really hard to bottom tick your purchases, right? Or top tick your sells. But if you can kind of have your bat in the zone for a long time, which might be sort of like dollar cost averaging into a name and maybe trimming out of a name, that maybe that gives you the best chance at making a good contact with an idea. The next thing we'll try to transition. I'm going to add a little bit more to the science of hitting, the book, and talk about Joey Votto, who is kind of the closest thing that we have to Ted Williams today. He's a left-handed hitting first baseman for the Reds. And his Bible actually is the science of hitting. Like, he talks about it all the time, but just should probably be no surprise. But in 2016, and by the way, like some of these numbers I'm going to talk about right now, I got from my a YouTuber that my son likes to watch, this guy called Foolish Baseball, who just like dives into all these crazy numbers and talks about different players. So this one is about, in 2016, Joey Votto hit over 400 for a half of a season, which is the closest that anyone's kind of really gotten to hitting 400 since Ted Williams did it.
Better than Ichiro?
Well, I mean, other guys have had that, but like Ichiro, I think this is the most recent time that someone's hit that well for that long.
All right. Might have to call fake news.
Maybe. All right. Let's not ruin the story with facts, Bill. So Foolish Baseball is talking about how like Votto, there's like 3 things that are important to this equation. Number 1 is avoiding strikeouts, right? So we can already imagine what the investment implications of that are, right? Like taking zeros, really painful, hard to overcome. Number 2 is called BABIP, which is batting average on balls in play. So if you actually make contact with the ball and hit it somewhere between the lines in fair ball, what is your batting average when it is put in play? And it turns out that the typical batting average on a ball in play is about 300, and anywhere from 250 to 350 around is like what you could sort of expect on a ball that you put in play. Anything lower or higher than that is probably a fair amount of luck, either bad luck if you're below 250 or overly good luck if you're above 350. So, and where the ball, how the ball exits is a big deal on your BABIP. So a ground ball that you hit in play has a batting average, expected batting average in the majors of 2.39. So 239 batting average on a ground ball that you hit. A line drive has a batting average of 685. So it's quite a bit higher if you can hit line drives. And a fly ball has a batting average of 207, which is like obviously not that great. But the part that you have to kind of factor in today's game is that the fly balls often turn into home runs, right? And that's like, that helps this idea of like slugging percentage that some investors have talked about. Like they don't care what their batting average is, they care what their slugging percentage is, right? And they famously cite like George Soros, where he was wrong like probably 70% of the time, but when he was right, he was very, very right, and he bet big, and he had a huge slugging percentage that overcame that. Well, I would argue that it's really, really hard to have a high slugging percentage and like to be very, very right and hit home runs like that. And only 12.7% of fly balls that are hit turn into home runs. And I don't know what the exact investment, numbers are. It probably depends on whether we're talking about VC, which is like, I don't know, maybe 1 in 100 turn into a fly ball that turns into a home run. Or, maybe in public markets, it's a little bit higher, some of those numbers. But I would say that we should probably be, at least for me, like my takeaway for this is that like I want to hit investment line drives that have a high batting average, that are going to get on base a lot, and are unlikely maybe to have as many fly balls that turn into home runs. And that's okay. Like I'm just going to take the home run and the fly ball out of the equation. And I'm going to hopefully take like the weak ground ball contact out of the equation and just try to hit line drives and look for pitches that are that line drive swing that I could take. And maybe it's different for everybody because we all have our own kind of circle of competence. But in my mind, that's like the model that I want to use. One of the things that's really important too is like this idea of walk rate. And, Joey Votto has the highest on base percentage and the highest walk rate of any active player. It's like 16% of his at bats, he gets a walk. And Ted Williams has the highest of all time, which was 20.6. So like 1 in 5 at bats, Ted Williams was getting a walk. And why that's so important is that you're taking then those bad outcomes of like a batting, a ball in play that's not hit real well. And so like, this is how you get your average up, is you don't swing at bad pitches. Right. And therefore you're going to end up walking a lot. And I think there's sort of implications for us as investors and sort of like cash management. Like you're going to end up walking a lot if you're only waiting to swing at good pitches. And I would say like looking at Berkshire's cash balances over the years, you could say, shoot, like that guy's walking a lot, right? Like there's always tons of cash on the balance sheet. But then when he does swing, like it tends to, I think he's hitting a lot of line drives. So the other thing too is like that walk rate versus strikeouts, right? So Ted Williams had probably the best season ever for anybody in 1941, 147 walks to only 27 strikeouts. I mean, that's an absolutely insane season. So anyway, like I think there's just a lot of interesting analogies, or at least I like it because I'm kind of a baseball fanatic because my kids are so into it, that I think that we might be able to take away in the investment front that might help us to hone in on like, when you swing at a pitch, what are you trying to do with it? Are you trying to hit a fly ball home run, or are you trying to hit a line drive, or is it ground balls, or are you trying to bunt your way on? I mean, there's lots of different analogies that we can use, but know what you're doing, know what pitch you're looking for, and know what swing you're trying to take on it.
The pitchers walk guys that they don't want to. They intentionally walk guys all the time, right?
Yeah, and maybe even more, they pitch around guys. Like they'll pitch. It's a semi-intentional walk. Like you just won't see a strike in the strike zone. Like if you swing at something, it's going to be the pitcher's pitch because he's not giving you anything to hit.
Right. I saw there was a girl in the softball who was going for the record for the season, the home run record for the season, and she was
They just walked her.
Yeah, they walked her.
I mean, Barry Bonds' 2004 season, he had like, I can't remember what it was, but I think it was over 200 intentional walk. Or maybe that's not right, but whatever the number was, it was just like the second place person, if I remember right, was like not even in the same galaxy as far as a number of intentional walks. They just were like, we can't pitch this guy. He's hitting a home run every time he's up.
He was
juicing, Barry Bonds' career OPS is over 1.
That's pretty.
So that means like every time he got to the plate, you could expect him to get at least 1 base. That's crazy. And somehow the guy's not in the Hall of Fame because we all get upset about steroids, even though we all knew what was going on. Okay. So stupid.
I saw something that his 2004 season, his if a player went and got a single and a home run every single game that they played, it would have been a comparable OPS to what he had for that 2004 season. Just
dude, he was nuts. I didn't realize Votto's OPS is over 900. My man Ichiro's is 770 something. So more hits, less power.
Yeah, Votto's legit. I mean, he's
both will get to the Hall though.
Yeah, I think that's right.
I'm getting a few requests to turn this into to make an analogy for the cricket. Sorry, dudes, I don't know enough about baseball to turn this into a cricket discussion. I saw someone mention the scoop bats from the 80s. Yeah, I remember that. I had the Gray Nichols double scoop. Didn't help.
No idea what you're talking about.
How does cricket still exist? We're having enough problems with baseball being too long. Cricket can go like a day.
Cricket goes for a test match goes for 5 days.
It's insane.
How many hours per day are they doing it?
Like the first ball might be at like 9 and they might play until it's dark. Like it could be 5 or 6.
What?
Oh my God.
It's like a war of attrition, you know?
Yeah.
Because you just like lose interest as a player, or is it?
You got to like cricket's like, it's a beautiful blue sky. It's a nice green lawn. Players are in whites and the cherry red ball, you know, it's very soothing to watch it. It's very calming. And there's, you know, it's strategic. There's a strategy element to it, and you can retire people hurt. So you get the super quick bowlers, the express guys, and, you know, they doctor pitches too. So if you know that
spitball or something,
if you're the home groundskeeper and you know that you've got some quick bowlers who can do a lot of damage, they'll make it a very dry pitch that crumbles so that the ball bounces really high and bounces all over the place. And, you know, reverse that. If you've got some spinners, it'll be spinners will be like a very sticky wicket. It's you know, it's
the old sticky wicket.
The only sticky wicket on a spinner.
It's what it is. It might be one of the most popular games in the world. So
nice.
Fair enough.
Thank God for the Indians. They're keeping it alive.
Yeah, I think, you know, the only thing is you gotta be okay just not swinging.
Yes,
this is true for cricket too. That is it's very true for cricket. Same idea. You just don't want to hit the bad, hit the guy's trying to trick you all the time into taking a swing at something you shouldn't be swinging at.
You know, one thing that I just realized, Williams would always take strike one to get his timing, which is almost like Buffett's equivalent of like never buy an IPO. Wait to see what it does for a while before you take a swing at it.
They bought Snow at the IPO, didn't they?
That wasn't
maybe not Buffett.
Yeah, that's true. I think part of my indexing fetish is part of it is the divergence of performance, both positively and negatively. I'm not sure that I deal with that very well.
Nobody does.
Yeah. So
you don't deal with it positivly?
I've never experienced it positively, so I can't comment on that. But the negative stuff,
we will find out what you're made of.
I've only been a value investor for about 14, 15 years, so it's too short a time period to comment on the positive side. It's coming.
I think it's a skill to be ahead and keep discipline.
Yeah,
I think
be a good winner.
Greenblatt's got the kind of. I like Greenblatt's kind of quantity approach. I saw he was on William Green, did a podcast.
Yeah, that was a good interview.
Was it? I haven't checked out.
Yeah, it was. It was very good.
And he got asked about mine, the acquirer's multiple, and he just said that we didn't back test it to try and figure out which was. We ran one back test, which I thought was. I kind of knew that was the case. It was a good answer. I don't have any criticism of the way that he put together.
He actually said, I don't know that you can say, but I can say, I think I can say, he actually said a deep value strategy has higher expected return, but is more cyclical.
Yeah, more volatile, I think is what. Yeah, but possibly that's right. Yeah. Look, it's. I don't know. We'd have to go back and run it.
Check out the podcast to hear what he said. Don't quote us.
It's Investors Podcast with William Green. I can't be too critical of what he's done. Like I like his approach to it. I just, and I didn't back test mine. I mean, I didn't like data mine to get the answer. I just was wondering about the impact of like blindly buying high return on equity. But I do think that there's a lot to be said. If you can find some defensible high returns on equity assets, capital, whatever, and buy them reasonably cheaply, like clearly that's the best way to do it. It's just a little bit harder to do than to say.
Yeah, and valuing the options, right? I mean, there's a lot of companies out there that have a lot of option value, but then you look at the enterprise value and it's like, well, they better have option value because you're not paying for the current enterprise.
Yeah, it's all on the come.
Yeah, which, that can work. But I do think that like the question that I've asked myself on those kind of ideas is how much can you really size them? Because I think if you have a portfolio of those, I don't know. I mean, it can work, but I think they're correlated. I know they're correlated in the short term. I'm certain of that. So you got to have an investor base that'll let you get through that. Then you've got to have an emotional makeup that'll get you through that. And then you got to be right.
So this is trying to hit a fly ball. Let's say you're going to only be evaluated on 10 at bats, right? Like you only take 10 swings, like so a super high concentration portfolio, and you're trying to hit a home run with those 10, you're like, chances are you might hit a lot of fly balls as well and just turn into outs. So sometimes I think that like really high variance plus high concentration might be a little bit of a dangerous game to play.
Yes,
it can work. And you could be in a cohort of people who do that and somebody in that cohort does really well, but I don't want to be the guy that misses out. I want to capture as much of it as I can. That's one of the things that I know. I've done some testing where I just you hold it for as long as from when the screen identifies it to today, which could be like, 2+ decades. And it's very, very hard to predict from the outset which ones it's going to be. But I think it's a pretty good argument for having smaller position sizes if you're going to hold for the long time, because the ones that work go up 50 times. And so it doesn't matter if you start out with 1 or 2% in it, like that kind of carries the whole portfolio. And you end up at the end of the whole thing with this portfolio, it's like filled up with all of the stuff that's worked is the stuff that's the largest in your portfolio. You look like a genius, even though it's just all, pure randomness.
Yeah, that's more or less what happened to my grandma.
What was she concentrated in?
Yeah, that's
what
the coffee.
I mean, now I am because she gave it to me, but like my biggest position's Microsoft by far.
Congrats. Good call.
Yeah, you know what a cost basis is? $1.38.
Pre-split.
Yeah, her cost basis in Coca-Cola is like 97 cents. Her cost basis in Berkshire is super low. It's crazy. But she's 93, so that's what will happen.
She got any hot tips for today?
Well, her situation.
Let's ride that hot hand.
Yeah,
Baba. Baba.
Yeah,
she likes Baba.
Yeah. Shout out to my man. I'm not saying this is a hot tip, but Kyle Sermonara, who just got somewhat blessed by Peter Lynch. I would be pretty proud if Peter Lynch took a 5% position in my company. I think that's pretty cool, even if it is a small percentage of his net worth.
We're coming up on time. So thanks very much, everybody.
We made it.
We did it. We'll be around next week. Are you off next week, Bill?
Yeah, I am. Yeah.
So I think
it'll be in Hawaii.
It'll be Ian Castle next week.
Nice.
Filling in for Bill. So we'll do some.
He's got a fruitful basket right now that he's picking through. Small caps got crushed.
Yeah, small caps have been dinged up over the last 12 months.
Yeah.
Rough run.
This game's hard.
Forward returns are good.
Forward returns looking good.
That's right. Kathy Wood, gonna go to
40%?
small cap.
Oh.
Dudes, thanks very much.